This week's crypto recap. Bitcoin celebrates its fourth halving. The rollercoaster ride for altcoins continue, and Hong Kong approves its crypto ETFs. We cover all this right now in the Collective Shift weekly recap, actionable insights, and a breakdown into the crypto market and everything else you need to be knowing about. As always, we'll get things started with a market recap, and it was quite a week, Nick. But then we look at it here where Bitcoin's up 0.1% for the week.
Yeah, altcoins really crashed this week. I think that was the main theme after that big run-up I think we've seen in the market in the last 6 months. And I think altcoins were some of the biggest losers. And especially I noticed a lot of these AI coins as I was doing a lot of research. I noticed they were some of the biggest losers and droppers.
Yeah, there was notables like I think Fetch AI was one off the top of my head that I saw was down more than 50% from its recent highs. And yeah, that wouldn't be the only one for sure. We saw quite a bit of panic early last week. Bitcoin, led the panic, but then you saw the follow through in a lot of altcoins that bled a lot heavier. So Bitcoin did actually very momentarily dip below 60,000 US dollars for the first time in a little while. But that was aggressively bought into by people waiting on the sidelines. And as the outlook for the unfortunate circumstances going on in the Middle East, did not get as severe as what was initially impacted, but it's still on edge, it does look like. But Bitcoin then shot back to the middle 60s, so it's on about 65,000 at the moment. But yes, as you pointed out, Nick, altcoins suffered a lot worse, and they have not returned, many of them, they have not returned to where they were, call it 7 or 10 days ago. Solana, just to point out, that did go down to about $115 momentarily. It was, widespread panic over the market. If you may remember, Solana, it wasn't long ago where it was 210, something like that. And ETH, I think, did go down below 3,000 as well last week. So, just a lot of panic here. And I suppose just anecdotally, it was the worst that I can remember the sentiment on altcoins being in probably going back to like the bear market. Yeah,
and we haven't really seen that level of drawdown in the bull market so far, which is probably really unique. And I think everyone's sort of waiting for such a sell-off to happen because, this was very common in past market cycles. But whether it's the ETF demand for Bitcoin that has helped, inflows, but we really haven't seen that spectacular level down. And I know BTC dominance is probably the number one figure we look here in terms of altcoins and where the attention is going. And we saw Bitcoin dominance, the total amount of the market cap that is comprised of Bitcoin, that hit above 56% to about 3-year highs. So that's probably one of the main metrics we'll be looking at. Really tells, I think, the story of the market.
Yeah, absolutely. You tend to see bull markets in more or less go in two phases, where the first phase dominated by Bitcoin, which is still, I would say, is relevant now. And then the second phase, which is typically a bit shorter, maybe 30-40% of the overall bull market, historically says that altcoins strongly outperform Bitcoin, which we have yet to see so far in this bull market. But a big milestone, speaking of Bitcoin, happened over the weekend, and it's something you may have heard about. What have we got, Nick?
Yeah, we finally have Bitcoin halved. So this was a major event, happens every 4 years. We spoke about it a bit on the pod last week, so we won't rehash too much about, I guess, the impacts of Bitcoin. We put out a few newsletters as well on the topic. So if you're curious, head to the member platform and check out these deep dives into exactly what this means for Bitcoin. But at a high level, it's just such a big deal because historically, even though we've only had 3 halving cycles to go off, so we don't have a large data point here, Bitcoin has reached new all-time high after that halving date in about 365 days a year to 500 days. So all eyes are on whether it's going to be a shorter cycle, it's going to be a longer cycle, but we do know historically we do have a little bit to go until we reach a new all-time high and those effects are felt. Maybe putting it into numbers. Everyone talks about the halved, but it's really hard to contextualize. So we can look at it from a wide range of different perspectives. At a whole, the daily issuance is cut from 900 Bitcoin to now 450. And there's a few different ways we can look at it, from just a purely dollar figure, which is about 60 million to 30 million of daily issuance. And then if we look at just the yearly issuance, this goes from 1.8% to 0.9%, which in a way that can kind of actually tell or drive home the point even more about this rapid issuance of Bitcoin. So yeah, we got a lot to look forward to, and I'm not sure if you've been looking at the main talking points there, Matt, but Runes has been in the news a lot, circling around. I know there's some certain AMMs, these different marketplaces like Uniswap, but for Bitcoin tokens popping up to trade these new runes, which is going to be launching, which is essentially just a new token standard for Bitcoin.
Yeah, it's been all the talk all over socials and runes, not to be confused with, I think, the rune token, the Thor chain, which is one we've covered over the years. But yeah, the runes protocol going live on Bitcoin is, the talk of the town, essentially trying to bring elements of what you get on Solana and Ethereum over to Bitcoin. There are other ecosystem or emerging sub-ecosystems in the Bitcoin space that have been trying to do this a while. Runes is, to really simplify it, the latest attempt, but to go into more detail about it, we do have some content over at Collective Shift. I know you covered it recently.
Yeah, essentially it just makes it easier to create meme coins like you see on Solana, but on Bitcoin. So there's a lot of people that believe that maybe it's bad for Bitcoin. Some people just think you can do whatever you want on Bitcoin. There's no gatekeepers really. So this is going to be one that we see play out, and who knows if we see Bitcoin start to take market share away from some of these other chains that are speculating in meme coins, or whether Bitcoin is just going to be home to all these new types of applications, hopefully in the next coming weeks.
Yeah, this is actually a very, sound point in terms of, does this adoption of runes maybe decrease the appeal of using Bitcoin in other areas. You talk about even a lot of the third world sort of use cases where it's cheap to use Bitcoin for payments and whatnot, or the fees are cheap in terms of using Bitcoin. Normally a few dollars equivalent of like a fee on Bitcoin, but now rocketing up to maybe $10 per transaction in the case where something like runes really takes off. You've got those competing appeals there, but then you do have the likes of Lightning and these other Bitcoin scaling solutions, for lack of a better term, that are wanting to, I suppose, satiate that demand of wanting to use Bitcoin for payments and secure payments and whatnot. So really, I think where I draw the line on these sorts of things is the more demand to use Bitcoin, the better, because even if it does hurt some other use cases in the short term, it brings along and spurs a bunch of creativity, entrepreneurs, developers, probably most importantly, to really think of ways to, I suppose, get more out of Bitcoin.
Yeah, and this is probably where we can round it out as well, is how this impacts the halving, is that when we have less issuance, there's more pressure on the long-term sustainability of Bitcoin, because now you got probably less fees coming in, less Bitcoin being mined. And this is why a lot of people are looking at alternatives to try and gauge demand, because when you have meme coins and all this other activity on Bitcoin, it means that miners are paid more and they receive more revenue, which can then offset some of these concerns with dwindling security and issuance. So this is kind of how I'm seeing this all play full circle, and I guess we'll see in the coming year exactly how this plays out, because a lot of people may not be happy with the way this is heading for Bitcoin.
Yeah, for sure. We'll watch this space, and it's an exciting time nonetheless, or a time there are a lot of energy going in the Bitcoin ecosystem.
But we got Hong Kong finally on the ETF front. It's almost as if the ETF talk does not stop.
No.
I don't anticipate it's going to stop anytime soon, but a lot of headlines now that we finally have some news from Hong Kong. We talked about in the pod last week that we're potentially going to see Bitcoin ETH ETFs, but heard Hong Kong regulators have approved or will approve a launch. Do you have more on this one?
Yeah, this was notable, particularly, we talk about the spot ETFs, in the US, meaning they're not futures ETFs. Spot ETFs are important because the issuers have to buy the equivalent Bitcoin or Ethereum or Ether to sort of back it one-to-one. So it sort of has a demand dynamic on the price. And this was approved in Hong Kong. So spot ETFs for Bitcoin and for Ether, or ETH, and it's really notable because it's the first time there's been a spot Ethereum ETF, at least there might be some in some other smaller economies, but that was notable for that reason, as well as I think a lot of excitement there was about this news. But I think initially you saw some ETF analysts come out and pour sort of cold water. Well, not cold water, but I think they sort of, eased the excitement, just because I think Hong Kong is seen as it is a pillar of the global financial system in a way. It's one of the main sort of cities in the world, but its ETF market is minuscule compared to something like the US. So that was like an important bit of information, but I suppose the positive really is just that it's helping legitimize ETFs, even if it is a marginal improvement.
Yeah, I was seeing it was something along the lines of 500 million expected inflows. So much smaller compared to what we saw with the Euphoria enter in the billions and billions of dollars when we saw the spot US Bitcoin ETF go live. I guess also a consideration here is that, hey, China was incredibly hostile to cryptocurrency in 2021 and in that bull market. In the bear market, they've slowly kind of pivoted to allow Hong Kong to become this sort of vehicle to get exposure to a lot of crypto products. They had a lot of announcements last year, allowing exchanges to get back on board and service crypto customers and offer crypto assets. So this is kind of that step in the direction of China reopening to crypto, even though you can't access it in mainland China. You can still then get access via Hong Kong. This is also one I like to think about because if you want to look at top and bottom signals, typically China does ban or become more hostile when you reach the top. So who knows, maybe this is more legs to go considering they're opening up and haven't enforced the ban yet.
Yeah, very true. We'll watch that top signal for sure. In terms of, regulation and updates there was a notable case last week that I think he talked about, Nick, but there were some further developments this week.
Yeah, this one was our favorite crypto trader from Mango Markets, Avraham Eisenberg. He was a guy who essentially used the DeFi platform to manipulate and gain $100 million of financial gain from it. He was in court and the jury was out to see whether he was going to be found guilty or not. Turns out he is guilty, and turns out code is not law for some people that talk about it. He was very famous for saying that he just is using the crypto protocols as they were intended. So he essentially didn't do anything wrong. But that kind of defense didn't fly well with the law in the US, essentially just saying that, hey, it's a bunch of rubbish. You are responsible for the way you manipulate crypto. So this is kind of another case where we're seeing stack up in the attitudes and the way cryptocurrency is kind of regulated, and especially in the courts, because he's saying that, hey, it's not so much these special rules that apply to just crypto, but any open market activity like this is going to be treated the same way. So small little case there, and I think we're going to start to see DeFi continue to be in the line of sight with a lot of regulators who are looking to bring it in line, and we'll probably see a big announcement in the coming weeks in terms of the SEC and Uniswap, the biggest crypto DeFi platform, come up against the firing line essentially. So another one we got here is a new stablecoin bill that's potentially going to enter the market as well. This was met with a lot of mixed responses. You may have been seeing it flying around the news circles. Essentially, the US is one of the only jurisdictions, outside of the UK, Europe, even some parts of Asia, not to have any fundamental stablecoin law. I think it's going to be a bit more before we, get any more actual solid laws here, because it's looking like it probably won't pass. It was actually hated by people who didn't like crypto and then people who love crypto. So that's always a good sign that, hey, it's hated on both sides, that, hey, this probably has a very slim chance. The thing that caught my eye, though, was how they're talking about how these things have to be backed one by one. And then it's banning algorithmic stablecoins like we saw Terra Luna. So my big watchful eye here is going to be saying, well, if a stablecoin law does get passed that requires one-for-one backing, what does this mean to some other stablecoins like DAI who back some of their cryptocurrency via ETH or staked ETH? So I think we're going to have a real interesting time here if a type of law does get passed in the coming months, and if not, it may take a lot longer with the US elections coming up.
Yeah, certainly. We'll watch it, but at what pace it goes, I think, is another thing that yet to be determined. But yeah, for sure, always efforts going to, I suppose, make crypto more regulated, which we do ultimately want, but the process is a bit slow. But
very slow moving. I think we've all been talking about this for the last couple of years, and very likely could take us into 2025, to be honest.
Looks like it for sure. But in the meantime, we'll focus back onto the altcoin market. So yeah, as we talked off the top of this episode, there's just really bad sentiment in altcoins at the moment. If you look at a lot of their price charts relative to BTC, which you can do on just popular websites like CoinGecko, you would see that a lot of these altcoins are underperforming BTC. So for a lot of these investors, they're taking on a riskier asset, and their returns are worse than what is traditionally seen as a safer investment in terms of Bitcoin when you look at its historic performance, at least. And obviously that's not indicative of what may happen, but it would not be a great time, I suppose, is what I'm saying, to be an altcoin investor or someone who's 80% into alts, which a lot of people I speak to are. And while there continues to be updates on altcoins, which we'll get to soon, yeah, the sentiment is quite bad at the moment. But on Solana, the most popular, I suppose, amongst all the traders and meme coin traders in particular these days, there was an update last week.
Yeah, this has to do with the network congestion on Solana. So if you're a user of Solana, you probably know what I'm talking about here. But if you're not, essentially, it's been pretty difficult to use Solana in a really easy way. It was really known for being the best blockchain to cater for a lot of use cases and for a lot of retail users and just everyday crypto transactions, because bridging from a lot of Ethereum L2s, really difficult. Solana kind of said, hey, I fixed that problem by having everything in a nice, tidy, packet and parcel. But unfortunately, with a lot of meme coins, a lot more activity on the network, we've been seeing degraded performance. People can't get their transactions in. And this has resulted in something like 75% of transactions, that weren't able to be completed or, had to be reverted or, weren't able to get done. And we're just seeing this is continuing. And we're finally seeing a possible network upgrade that happened over the last few days to try and fix this. So it's by no means going to be a grand solution for Solana, but it is a step in the right direction for Solana Labs and a lot of Solana developers to try and fixing this network congestion. I just saw in the nitty-gritty here, it just means that Solana validators have a better or an easier time at trying to pick out who are the more legitimate users of the chain, rather than a lot of these bots that are flooding the network and making life very difficult for validators. So big one for Solana, and one that is only going to be, I think, keeping in the limelight, because it's not a not a all-in-one fix here, but we're going to be seeing multiple upgrades come in the next couple months.
Yeah, absolutely. Well said. In terms of EigenLayer, they also had a big announcement last week. I think we spoke about the mainnet release and some actively validated services or AVSs going live on EigenLayer. And last week they unpaused their liquid staking token caps. So I will actually be doing a post for members soon on what my plan is with regards to EigenLayer and also Swell Network in that same post as well. But yeah, a project I still continue to follow quite closely. In terms of Ethereum L2s, it never stops with these Ethereum Layer 2 solutions, which if you're very new to crypto, is just a project built on top of Ethereum that tries to get a lot of transactions to take away from the Ethereum mainnet, which can't handle many transactions at once, to simplify as much as possible. But were there some announcements last week, Nick?
Yeah, we finally have one of the biggest exchanges, OKX. They talked about launching an Ethereum L2 earlier in the year, and they finally hit mainnet. So this big announcement, kind of like what Base is doing. Coinbase, one of the biggest exchanges, they had their own L2. We saw this same thing play out in years past with Binance. They created their own chain to try and scale and provide a different way to access their exchange and have their own environment. So we're seeing this play out with a lot of exchanges, and kind of my eye is now on the likes of Kraken. Now we're rumored to be looking into an Ethereum L2 as well. No formal announcement just yet, but I wouldn't be surprised to see Kraken, one of the leading exchanges without a L2 or a chain of its own, enter the ring and potentially partner with the likes of a Polygon, Optimism, or would be surprised in Arbitrum, but some of these chains that you can build on. We've also got WorldCoin, which is probably one of the most talked about cryptocurrency projects. They finally announced an L2 chain built with the OP stack. So this is a really big deal because they target themselves as one of the only human-only blockchains. That's the way they were kind of they were messaging it in their announcement. Huge one here because I think WorldCoin is the third largest cryptocurrency as per fully diluted valuation. huge and crazy to think about, considering just how small they are and yet to even have a chain or many products of their own. But, big one here, and the big highlight for me is just, hey, these exchanges, these big projects, they're still looking at Ethereum to build on. So I'm curious to see if we see the likes of Kraken follow suit.
Yeah, it's really has me wondering, like with so many exchange L2s, probably going to keep coming out. It really begs the question, like what's the defensible moat, if any, or what's the unique value prop that they can offer the users, like if not just a similar experience to using Optimism or Arbitrum, but I guess a bit more curated or tailored for their specific users. Is that what you're sort of seeing?
Yeah, that's I think the case for Base especially, that they may be able to have some KYC users, or they'll be able to tailor exactly what products are offered depending on, if certain thresholds are met. Because at the end of the day, it's that more tailored experience on these chains. I'm also just seeing it as whether they're trying to cannibalize parts of their own business, because they do see the future is more on-chain rather than what's currently, the way they currently run their business. We saw this talk about CZ and Binance. He actually said a couple of years ago that he sees a future where Binance is fully on-chain. And now we've seen the last couple of weeks that the amount of USDC that has been bridged to Base has kind of went vertical. It's went from about 300 million at the start of last month in March to almost about 2.4 billion at the end of May now. At the end of April. So huge amount of USDC moving on chain. And this is because Coinbase is actually moving parts of their customer funds on chain. This is kind of way that they're cannibalizing their own business. And I can kind of see why they're kind of continue this mode. Because at the end of the day, if you save money by doing things on chain and kind of changing your business to just becoming like a user interface to crypto, that's a huge moat, because it's really difficult to access crypto at the moment if you're new to the space. And a lot of people just want to go to trusted exchanges and trusted parties to access these different types of things. And at the end of the day, it may just be abstracted that you are, staking via Lido, but you're not really knowing you are, because you're just accessing it via the front ends of popular applications like Coinbase or Kraken. So that's the kind of way I see it going. And hopefully we see, I think, other exchanges follow in the near future.
Yeah, thanks for that. It's really helpful framing. And I guess that's the world we're entering. And exchanges cannibalizing themselves. All the whole reason they're doing it is really to provide users as much fees as much the best experience possible, given the amount of competition out there.
Speaking on Ethereum L2s, the final one we got here is Arbitrum, because they announced Bold on testnet. Maybe you can fill users in what Bold is and why it's something you should really be paying attention to. Yeah,
it's been coming for a long time coming, or at least in crypto terms. I think it was talked about 9 or 12 months ago or so, but it's finally been launched on testnet. So really, it's a system that effectively lets anyone validate Arbitrum chains. So historically, in Arbitrum's existence, they've just had a core group of about a dozen or so entities. I think Coinbase might be one of them. I know Google is one of them, where they're essentially trying to be the referees of the system, and it's a real permissioned set. And it's not great because not great or not ideal, because you talk about these permissionless nature of wanting to experience interacting with Ethereum or Bitcoin, where that is an appeal of it, the permissionless nature of it. Whereas when you move up to something like Arbitrum, it's currently still technically permissioned. So Arbitrum Bold launching on mainnet, hopefully sometime this year, will really, I guess, help interacting with Arbitrum be a lot more similar to Ethereum mainnet.
Yeah, it's such a big deal, because I think, the biggest knock on these Ethereum L2s is that they are still highly centralized in certain ways. I know Optimism is, I'm not sure you mentioned, they're going to be coming out with a similar thing that's in testnet. So this is a huge step to help increasing trust to these L2s. And hopefully we'll take them over the next notch into the next year to earn a lot back trust from the industry. Now maybe shifting gears away from Ethereum back to Solana, we've got Jupiter. That's one that we'll be coming out with some more asset pages and more analysis on in the coming weeks. But they've come out with their season 2 in their Launchpad and voting. You across this one, Matt, and maybe why a lot of attention is on Jupiter. And I know there's really cool token accrual mechanisms where, Jupiter does get some of these coins and cryptocurrencies for projects that launch.
Yeah, so one of the products on Jupiter, they have a few products these days. They're most well known for being the place to go to just trade tokens on Jupiter, similar to Uniswap on Ethereum. But Jupiter's Launchpad is a really popular product. It's where projects go to apply and be, I suppose, candidates for launching their own token. And why would they do it through Jupiter Launchpad? It's just to get more awareness, given how popular Jupiter is. The real cool thing, I suppose, for Jupiter holders or holders of the JUP token, which is very much new to crypto. It's like nothing else really. When you use your JUP tokens and stake them to Jupiter Launchpad, you have the ability to vote on which projects you want to, go ahead and launch via Jupiter Launchpad. So there's a winner or at least one winner, sometimes two, of every round. So round 2 just concluded. I think Sanctum and maybe another project were also winners of that round. And as you said, sort of what comes back to the Jupiter holders from that project is they allocate a very, very small percent of their token to anyone who votes in these rounds as a bit of a hat tip to people, or a bit of a nod to people who are participating in the whole Jupiter ecosystem. So, it's just a good example, I think, of what a lot of crypto retail investors or just anyone outside of crypto, they always think about the price chart and whatnot, but there are a lot of ways to, I suppose, generate higher returns, for lack of a better term, by just participating in these ecosystems. So staking is a well-known one, but something like this, which is a bit more active than staking, given the round only lasts for 48, 72 hours or something. But it can turn out in quite a few airdrops over time, which really result in a higher return versus just passively holding the JUP token. So it's something I just wanted to give a bit of a shout out here as we learn more about ways to, get involved in crypto. But in terms of things to look ahead to, now that the Bitcoin halving is over, the calendar is a bit more clear for other narratives to come along. We see runes at the moment dominating, but I've got one eye on MicroStrategy, which in May 1st and May the 2nd, I believe it is, they have a 2-day conference called Bitcoin for Corporations. And who knows, there's nothing confirmed happening at that event in Las Vegas, but a 2-day conference, I wouldn't be surprised if we saw, some companies come out and announce either that they have bought Bitcoin or they are preparing to buy Bitcoin. It's just something to watch.
Yeah, beautiful. Maybe we can get you there, Matt, to get in the Bitcoin for Corporations, get the inside scoop, but maybe shifting gears to rapid fire. I know this is one of my favorite segments, is looking what we feel is underappreciated in the market. I think you've got something related to Coinbase.
Yeah, they are apparently going to be coming, they already exist in Australia, but apparently putting more of a focus on Australia later this year and, flying over some leaders to do more advocacy work with, politicians and regulators just in terms of education about crypto. So thanks to Tom for the scoop from Cointelegraph. I'll send this to him after this. But yeah, that's something that's coming out later this year. As we know, Australia crypto regulation is currently, it's being progressive slowly, been in a state of flux for a while. So, with someone as renowned as Coinbase in the crypto industry coming to put more of a concerted effort into helping, I suppose, advocacy in Australia, I think that's really good and something that'll be happening later this year. Yeah, what have you got for us on the underrated or overrated, Nick?
Yeah, I've got gaming is back in the focus. It's been a narrative that's probably lost out to some other ones, such as AI, and then even scaling and Bitcoin. But I was really excited to see news, a few Disney execs kind of left the team and went to form Galactic Entertainment Publishing. So this was, I think, an Abu Dhabi-based Web3, gaming venture. And they've kind of approached a lot of different employees from the likes of Disney, Warner Brothers, Activision Blizzard, and Epic.
Wow.
A lot of these employees were actually credited with working on different films from, the Batman, the Avengers, Blade Runner, also games like your Fortnite, Call of Duty, and Star Wars. Really excited to see this. And it's kind of these things that we don't see on the surface and talk about, but it's really important for key narratives in gaming. And I think it kind of is another shift in the right direction, that, hey, crypto gaming does have a lot of legs. There's still a lot of investment going on behind the scenes that maybe the average retail, user or investor may not know about or see, because these things can be really kind of waved under. And I was just really excited to see there was a quote with one of the, I think, former Disney execs, and they were kind of just saying that they're really excited for people to unlock different gaming skins, different gaming NFTs via their gameplay and via loyalty. So that's where they see the future is going, that, hey, NFTs and crypto and gaming is something that's very tangible. And I think we're going to start to see the rollout of a few more games and a few more offerings in the coming months, possibly into next year as well. This narrative does seem like it has a lot of legs to it.
Yeah, good find there. Galactic Entertainment Publishing. I'll be sure to read about that. But that will be it for this week. If you are looking for more insights, see our revamped weekly Shift newsletter, providing free weekly market insights every Friday. Subscribe at collectiveshift.io/newsletter. That's collectiveshift.io/newsletter.